Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thanks for joining us today on this 16th of June, where we're going to take a look at Forex charts and technical analysis, and to be very specific, the Camarilla indicator. So before we start with the Camarilla, let's first explain this disclaimer, stating the fact that the webinar is intended for a global audience and may not be suitable for everyone. To find out if it is and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only, and by continuing watching this webinar, you agree with this disclaimer. Alrighty, good. So good morning, Mudras and Jenny and everyone else. Thanks for joining. Hope you had a good weekend and had some good trading perhaps yesterday. We are going to take a look at the euro dollar, probably the pound dollar first of all, but before we do that, a quick look at the calendar, which will state that we have, I think, FOMC, right? Yes, it should be tomorrow, but let me double check. Today, in any case, we have CPI on the pound, the usual pound news event. We have some German economic sentiment coming up, building permits on the US. Those are the red tagged ones. And I believe that tomorrow is FOMC. I cannot see it here, but yeah, that should be tomorrow, New York afternoon. So the market could be a bit quiet tomorrow, perhaps even today. Let's see what kind of effect it has. But the closer we get, of course, the quieter it will become, and the more volatile the market will be during and after, on average. Besides the wave analysis that I mentioned, there's also a technical analysis section in the analytics part of Admiral Markets, by the way. Take a look at that: technical analysis, fundamental analysis, wave analysis, calendar. I just showed you. Those things are updated regularly, and you can see that here we have a article here from Nenet. New Zealand regular bullish divergence can be used for further trades. So let's take a look at that, what Nenet had to say. Before that, on Friday, was a technical update on the CAD, for instance, etc. Let's see. So we can take a look at the Kiwi and see where the Kiwi is now. But at this point, when Nenet was making it, he was expecting upside and then expecting resistance for more downside. So we can take that idea and see if it's interesting for this moment. Typically, FOMC, Jenny, is indeed a statement, a conference, or it's a press conference indeed with the Fed chair Yellen. And minutes are released, so there's a lot of things indeed. Alrighty. Camarilla, I specifically personally use for lower time frames. You can use it for higher time frames as well. I'm nowadays using a new Camarilla indicator that is probably a bit more pleasant to watch on the chart. Plus, you can actually change the time frame that is used upon. Let's take a look at that. Here you can see it looks like this, first of all. Plus, when you go to indicators list and you go to Camarilla 2, which is the name, and click on edit, not only can you choose the time frames, but you can also actually do a different period. You can see I have it on daily, but if you wanted to, you can even go lower for more maybe scalping. H1 would be scalping, 4 hour could be maybe, well, I guess it's about the same as D1, but and higher as well for higher time frames. So on a daily chart, it could be good to use MN, monthly. On a 4-hour chart, for instance, it could be good to use weekly. On an hourly chart, it could be good to use daily. On a 50-minute chart, perhaps 4-hour, and maybe a 5-minute chart, 1 hour. So if you're interested, first of all, in getting this indicator, it's no problem. I can send it to you for free. Just send me an email with a titled, please send Camarilla or something like that, and I can send you this indicator. Now the Camarilla indicator itself is useful for support or resistance, indicated by these levels, L3, L4, L5. Just a quick introduction, just in case someone is joining for the first time and is wondering what is the Camarilla. It's a pivot point indicator. It shows 6 levels. If it's in between L3 and H3, basically it's in a range at that moment. In my case, it's an intraday range because I'm using it for intraday purposes. And once it gets above H3 or below L3, it's more of a trending mode with H5 the target, L5 the target to the downside, H5 to the upside, and H4 and L4 kind of like intermediate levels where they can get a retracement. So they serve as support or resistance. They give an idea about bounce or break spots, about the zone, whether price is trending or still in a range, and yeah, basically entries and exits. That's about it, I guess. So it's a more of a, it's not, it can be used for analytics, but it's also very useful just for trading purposes. All right, so with that in mind, let's take a look at the euro dollar. The euro dollar, first of all, on a blank chart, because I would like to take a look at higher time frames first of all. Alrighty, so this is the daily chart. You can see there is a chance that this euro dollar is in a zigzag, and the zigzag is just a formation, a chart pattern where price is making a 3-wave up, 3 moves up, and you can see that this upside is the first one, this downside is the second one, and this new upside here could be the third, something like this. All right, so in that regard, how far could that upside go? It could go, for instance, to the minus 272 target of this 61.8 bounce. That's still the same. In my opinion, that analysis, what was discussed last week or the week before even, still valid. Nothing really changed in my opinion. We have perhaps a bit of a contracting wedge because we have this support line, which is aiding the fact that we can get upside. But there's also a resistance line right here. So from that point of view, it is a wedge, and it's good to keep an eye on both trend lines, in fact. From a weekly perspective, we do have bullish candles here, so we're building some kind of base. So that's why I think if you look at the contracting triangle, there's a higher chance we'll break that triangle to the upside than to the downside. But both lines are valid, are interesting, are good to keep an eye on. Our decision levels for breakouts. All right, but I'm expecting an upside break from a technical point of view, but also from a wave point of view to the 117 level, which is the 38.2 fib as well, by the way. Not only a minus 272 target, but also a 38.2 fib when you draw this fib like that. And you can see confluence between these two fibs at 117. So from that point of view, an upside break to 117, max the 50 fib, I would say, at 120.80, after which a turnaround back down seems likely. And perhaps a big turnaround, because in this case we have a lot of momentum to the downside. So eventually, maybe not this month or next month, but maybe in August, at one point, after we complete kind of this correction, then I would expect this downtrend to continue to parity or below. All right, so now that we discussed the long term very quickly, let me go back to the 4-hour chart. From a breakout point of view, the trend line might not even be needed. I mean, if you look pure at fractals, then this is the important level in my opinion. And a swing trade above 113 here, let's see, yeah, a few pips even here, actually perhaps even now, or otherwise, let me check what this high is exactly, 112.96, 113.16, and it went to 12. Not yet, still needs a few more pips, but about 113.16 could be a swing trade. Now I say could because technically it's breaking this 4-hour fractal, and that itself I think is already worth a lot. And is already a potential setup, a swing trade to the upside. Just like that, with stop loss below the bottom, which is about 111.70. So it's about 140 stop loss, 140 pips, which is typical for a 4-hour chart. Now, in this case, is that a very, very good setup? Maybe not the best because we have a resistance level right in here and a resistance level right in here. So I don't think it's A class, let me say it this way. It's not the best, I would say, of the best when considering the resistance pretty close by. The space is not that great. Yeah, there's another factor indeed. The Greek news, you never know how that turns out and how that can influence price. Obviously, it's definitely will be vulnerable to any news that could leak or could be announced regarding the Greek potential deal or not, or whatever news that could be coming. So that's always a bit of a known factor indeed. So from that point of view, it could be a long right there, in my opinion. Now, I myself would rather wait personally, but it is part of my strategy. It is a strategy of mine, I should say, to take a break like that. And in many cases, I would. It's just certain factors like perhaps Greece and also this resistance that make me a bit more cautious and rather wait for perhaps a 4-hour candle like this to close first of all, instead of just taking a pending order to take a market order. Let this candle close bullish, look for retracement of this candle to, for instance, I don't know, halfway or the 38.2 fib. After it closes bullish like this, if it doesn't, I would skip it. If it does close something like this, it's good. And an entry at 112.96 with a stop loss, a tighter stop loss below the candle low would be another way of tackling it, in my opinion. That's the alternative. I like that one a bit more. Trendline break already happened here yesterday slightly, and it looks like we're getting a continuation. So we are in a bullish territory regarding the momentum and the trend. There's just certain levels of resistance that might cause it to be a bit of trouble. Now, from a Camarilla point of view, let's now dive into the 30-minute chart. You can see that the moving averages are aligned. I add the moving averages besides the Camarilla just to get an idea about momentum. And you can see that the 21 band is above the 144 EMA. So we're in uptrend and we're steaming ahead and approaching, passing the H3. So from a Camarilla point of view, it could be a long. But personally, I'd rather have a fractal than a candle close. So from that point of view, I rather let this kind of push up on a 50-minute chart or even 5-minute chart. Let it ride however it wants to, however far it wants to, perhaps to the H4. And then wait for kind of a correction like that and try to take this bounce. So let's see, we'll keep an eye on it. It's only 9 o'clock in my time zone. London just opened. European is just an hour open. So we can see in the next 60 minutes or so how the euro dollar responds here. Keep an eye if it does push up and maybe makes a nice hook back, if it's worth it. So there are two ways. One, it would be the 4-hour candle, just to wait for the 4-hour candle. That's always a very solid method, I think. And the euro dollar lower time frames could be good to see if it can reach H4, and if it makes some kind of bull flag down to H3 or so, if it gets a bounce. So I don't think it's yet ready. I still need to see a bit more development here, but it's certainly shaping up to be such a day. Alrighty, let's take a look at pound. Maybe I can give a bit of an example of last week, how such a pullback would look like. But Björn is also saying let's see, Euro odd and Euro cat. Yeah, if it comes back below, but I don't know. This is indeed. Yeah, I personally wouldn't be looking for a bounce as yet because of the momentum to the upside. So I would not be looking for a short at this moment, personally. But it could be, you never know. I mean, it could be a fade, it could be a fade out, and we go like this. That's always possible. But I think the best judgment is looking at price action. At this moment, it seems to be pretty sturdy. So I wouldn't be hunting for it as yet or looking for it. So before I look at the pound dollar, let's take a look at the euro odd. This is the same thing. It's a breakout as well. This looks a bit better, actually. Indeed. So I can test on this one a swing trade. The high is 145.78. That is the fractal level. So I'll be looking for an entry at 145.98 officially, but I'll go to 146.04 just to go a bit above that 146 number probably. My swing rules dictate that I should go 20 pips below the bottom. Which means about 144.01, but that would be, in that case, I'd rather go below, just below 144. So 143.97. And that is a big stop loss. So, I mean, obviously, not everyone would like this trade or can even do it because of the position sizing, depending on your account. If you have, a decent size account, you could take a very small lot size and you would still be within the risk boundaries. So let's say someone has 5K, risking 1%, $50 in that case, and this is a let's say 200 stop loss. Let's see, it could take 2 micros, 2.5, but okay, 2 or 3. Still possible. But yeah, with 1 micro, I guess the minimum would be 2K account. If trading 1%, then 1 micro is possible. Now, this might not always be the ideal setup in that regard. It's just a very loose way of trading a swing trade. It's not as precise as waiting for a pullback, for instance. Another idea could just simply be to fib it from here to here, and wherever it stops, look for a move back to the 50 fib. It could be more efficient. Yeah, great job, Modris, on the Euro odd. Let's see. Modris took it already earlier. I think probably, I'm not sure, maybe after this week. This week? Oh, nice. Even better. Maybe took it somewhere up in here, I guess, depending. I'm not sure which time frame. Maybe even lower. Great job. Euro CAD, the same thing. Breakout indeed. Already passed the breakout level. So let me apply Camarilla on this one then. This too looking like an intraday long perspective. But too much now at the moment. I mean, from a Camarilla point of view, I would like to get this back to the zero line, or from an oscillator point of view, I want this to get back to the zero line, and price to get preferably back roughly to H3 to look for a bounce. Same plan as the euro dollar from a Camarilla point of view, I think. From a swing trade point of view, it's the same like the euro odd. It's just the entry has passed already about 30 pips ago, so it would have to be 30 pips lower with the stop loss below this bottom. Same story basically for swing trading. It's just the price has accelerated a bit further already. And your odd Camarilla is same thing too. It's all the way past H4 already, in fact, and accelerating. Sometimes it's worth 5-minute fractals because sometimes you don't get 50-minute fractals at H3 or L3, and you do get to push through those levels. So sometimes it's worth 5-minute fractals because otherwise you might not get the fractal for the entry. I like using fractals as an entry. That's why, personally, just as a clear moment when to enter. And so, I mean, this was already before we started, but just before we started, 5 to 10 minutes, but that could be one way of catching a breakout, right? Just to give you an idea. Your dollar is also pushing through. It did not have any fractal. It just, well, except this, but that's not even close to the H3. So this is just a push up. So I do think your dollar will probably give a hook back at one point. But that's what I'll be waiting for at the moment. Unless you were able to catch the long from earlier ago, then I would be waiting. Alrighty, pound dollar. Pound dollar, yesterday I mentioned a potential long trade that I found interesting, and you can find that overview video by going to the wave analysis page. Just go to wave analysis, analytics, and then wave analysis. And you will find that here weekly Forex overview. That was yesterday's video. And in that video, I mentioned a potential long that I found interesting. At around 155 with a stop loss below at about 154.60. Ah, I just missed it. A pity. Yeah, that can happen. I mean, I understand that. To me, it looked like a great reward to risk, and I felt comfortable with that trade. But it depends. I'm also have those moments that my mind is saying it's a great reward to risk, but emotionally, I still not a big fan of trading. That happens indeed. But this one I felt comfortable with, and I took it on a 5-minute chart. Actually, I was looking for, of course, that zone 155 for a bounce, but didn't know exactly where it would bounce. I mean, what would it be, 154.80 or 155.10? So I let this 5-minute momentum ride out, and I was looking for 6 candles not breaking the bottom. 2, 4, this is the 6th. So I took it after the 6th. What I could have done maybe is even wait for a bit of a discount, a few pips before taking it right away. And well, I mean, the difference is only about 10 pips anyhow, but so that's why I took it. And I closed part of the trade for 50 pips profit, and part of it I have open. Stop loss was anyhow only about 35, so those 50 pips represent 1.5 units of reward already. And the other one is still open with the stop loss about the same spot, and I'm letting this one go to the upside. So now at the moment, I guess it's up about 120 pips. The second part, which is equally big as the first part, and caught this turn, so trying to find now a good exit. So what could be a good exit? Well, I have the TP still open because I wanted to leave it flexible and see what kind of levels it could reach. I think 157 could be an interesting level. It's H5 level approximately. There are a lot of pivot points here around that 150. It's a bit lower actually. Yeah, 156.90. It's a top in here, so that I think makes sense. Probably some fib target as well, I would say. All right, there it is. Minus 618 target. So I would be aiming for 156, let's say 156 would go to 80, maybe even 72, 156, 72. I don't like aiming for the very last pip. I think that's a good level, 156, 72, just or 70 even, just below that 3/4 level. So I'll go to 70. That would be then a profit of 169 pips divided by an original risk of probably about 38, I guess. So about 4.4 R2R, if it gets there. In the meantime, I might actually, anyone who took that trade as well, I might move the stop loss eventually to below this bottom. I didn't do it this morning because I was still thinking it could retrace and then bounce, and I didn't want to have my stop loss there because I wanted to survive this pullback. In fact, I was willing to live through that pullback, although it didn't happen as yet. So what if anyone wants to join? Or if I even wanted to join, I took half the trade off. I could also look for a potential to add back that half and try to add and scale in to that target because it's still roughly about 70 pips left at this moment. So what kind of options do we have? Let me actually go to a blank chart. Daily candles are bullish. Weekly candles bullish. We broke last week's high already. So from that point of view, it looks like we're continuing up as well. We're continuing with this uptrend, higher highs and higher lows. You can see that this particular break, still the swing trade, the break of this fractal, the swing trade, that swing trade is already up 250 pips. And I'm mentioning this swing trade on purpose because at this moment we're seeing similar or the exact same fractal break on the euro dollar, euro odd, and euro CAD, and you can see that it's doing pretty well this moment, and I would be trail stopping that below this bottom here. So technically there would be about 80 pips, only 80 pips locked in at the moment though, but still. A fractal are these little triangles basically. They indicate support and resistance. They indicate every time basically when a candle, high or low, is not broken within 2 candles to the left and 2 candles to the right, you get a fractal. So here we don't see any fractals because there's a continuous higher high. But this one is a fractal because that candle high is the highest of 2 to the left and 2 to the right. So when you have 2 to the left and 2 to the right that are not higher or lower, you'll see a fractal. Fractal on top or fractal below. Because at that point, that's a major level. Obviously, this fractal is this is more important even than these fractals. Why? Because it's a bottom, right? Because it's a bigger, major bottom. So this is even like more important than these again. But all of them are fractals. So it's just a quick way to see tops and bottoms, basically. I hope that makes sense. Let's see. So let me dive into the lower time frames. This is a bit difficult. Perhaps an L3 would be pleasant because there's a lot more space, but it's not there as yet. It's going up instead of down. It's right at the H3. If it breaks the H3, then there's only about 35 pips before you reach my target and about 55 until the official target. There's not a lot of space. But I am a bit conservative with my target. I mean, it could really go further. But this daily fractal is something I guess we shouldn't underestimate either. I don't know. I have my doubts a bit about the breakout here on the pound dollar. Just because of the space, perhaps. If it would retrace, it would be more. It would be more pleasant if it goes back to L3 or even L4 for a bounce. But will that happen? Is a big question. We would retrace part of the bullish candle. It's untraced as yet, but sometimes it happens. Look at this candle. Didn't get retraced. This one did. This one did. This one we don't know. Yeah, there's. Oh, thank you, Jenny. There's a UK news as well, indeed. So yeah, the thing is, the news. If the news is good, it will help my trade. Probably push it to the target. I would say, most likely. If it's bad news, we could see the retracement. Probably the news will bring it down, and then the technicals. Eventually, the news momentum will fade, and the technicals will take over, and let's say take over, kind of, and push it back up. I would say. Probably those are the two main scenarios. A short from 156.70. Let's take a look. Well, I probably would not be looking for a short at 156.70. It's my target, but doesn't mean I expect to turn around at that level. I'm placing my target basically at a safer distance of what I really think is the target, or in the potential bouncing spot, which is 157, 156.90 perhaps. Is an estimation, but the thing is with an estimation is that we never know how much momentum can push it and how far the trend can really go, and sometimes that goes a lot further than the estimation predicts. So that's one advantage of trading with momentum, because you sometimes get those bonus pips. You get that it's kind of like trying to bike with the wind, right? The wind is sometimes a lot harder and faster than we expect. So we're biking a lot faster all of a sudden. That's great. Now imagine us biking against the wind. One day it's going to be a lot of wind. The other day not so much win, but it's going to be tougher. So that's the same with this in the sense that the wind could push it a lot more, and then trying to trade against it could be risky in this case. I think it's not impossible, but I would be I would say it's more trade that requires a lot of experience. Could be a good scalp trade. That's too. It also depends on how much you're aiming for and what is your stop loss and stuff like that. I mean, 157 could easily create a 35 pip drop, for instance, right? Something like that. But then we have to see, could it continue or does it make a bigger reverse? If there's some kind of price action stallment, let's say, or some signal of that, that is indicating an exhaustion there, could be worth a scalp trade indeed. Or if it's the end of the day, if it's the end of the London session, it could even be worth maybe holding on to that trade, right? Because then the momentum, kind of the power that you see during the London session is gone. So typically the pound would not move that much. And then hopefully then tomorrow, for instance, it does like this today. And throughout the London it does this, and hopefully then tomorrow it will do that. And if you're lucky, something like that. That could be one way of doing it. Of course, if it starts to break this bull flag, then it will be good to exit that trade because it's probably then breaking up to the upside. But it's a bit more difficult trade, I think. If you do use a stop loss and you do want to make a reversal swing trade from there, then stop loss would have to be above, I would say, above one. Yeah, you can use different stop losses. You can use 157.30 or 157.60. The very safest stop loss would probably be 158.30. That's already a pretty big stop loss for a reversal trade, but depending on how much target you see. If you think that this is a hook back for more downside, then there could be that space. Oh, where would the news drive it? Well, probably to the daily. No, sorry. Yeah, I would say it could go probably to the L4. Let's put a fib on this upside. Any of these fibs probably. 38.2, 50, 61.8, even the 78.6 sometimes. Although I expect that probably a bit less. Alrighty. Kind of a slowish upside, isn't it? But it is pushing up. Let me take a look at the Camarilla. Maybe not that bad. Let me take a look at the comparison indicator that looks at currencies and tries to find the strongest and the weakest. Let's take a look at that. to see if maybe we can match the best ones. Yeah, it seems like I have different levels, and it could be because of the, I'm not sure which broker you have. It could be a bit of a difference there. New Zealand CAD. Björn is talking about New Zealand CAD. Fortunately, I don't think I can look at that one, but let's see. But I think, Björn, if you're saying that sometimes there's a big space, right? More, there's bigger space if you look at the higher time frames. I think that was your point. True. The fib on the pound dollar, sure, that's basically here 155.65 together with the L3, or 155.50, or 155.35. Okay, no problem, Modus. Modus was looking at the pound dollar. So let me quickly take a look at this indicator. Let me get rid of it first of all, just to add it again so that it's refreshed. Euro seems to be pushing on the lower time frames. Odd seems to be the weakest. CAD seems to be weak. Indeed, Euro odd, Euro CAD having the most momentum at the moment. Let's see. Sorry about that. I seem to have missed some other questions as well. Those green lines, Kareem, are these green lines are Camarilla levels, the Camarilla indicator. And you can get the indicator, it's support or resistance, pivot point indicator that shows support and resistance, bounce and break spots. And you can send it, you can get it if you want to take a look if you send me an email. And the email is right here. And Confluence, yeah, we'll talk about BT. Let me dive into that a bit later. Let me go through some pairs and then I'll dive into your two questions, okay? Let's see. So those are the best ones, the Euro at this moment. I think once again, the oscillator for me, going back to the zero line, price has made a very significant gap with the 21 band here, 21 EMA band. So that looks certainly, in my opinion, a pretty high certainty probability that this will continue higher and will follow through with upside. So I like the long potential on the Euro and Euro CAD after the retracement. Good gap. So as soon as it gets back here, it should bounce. Same for the Euro CAD. Same for the Euro dollar. I like that one more, these three probably, than any other pairs so far. Yeah, the pound, this one is a bit difficult, but let me take a look again at this. New Zealand is weakening as well. Somewhere I saw New Zealand here. Second lowest after the Aussie. So you see the commodity pairs not doing so well, but the pound New Zealand is maybe not the easiest to trade. Euro New Zealand perhaps could be a good one too, but it's all about basically roughly the same. It's capitalizing on commodity weakness and euro strength at the moment actually. All right, So let me take a look at perhaps Urian could be the same story, but yeah, 2 is breaking above. You see these moving averages, 21 band kind of made a retracement, and it's breaking above that same story. Broke above this resistance, broke above this fractal. So entry could be swing trade, same story, swing trade as well, but it could be on the lower time frame too. When looking, for instance, at the Camarilla, same story, just looking for a bit of a retracement. Perhaps we could take a look at a different pair that doesn't have the same kind of characteristic at this moment. Does anyone have a preference for a currency pair or pairs? Let me know. In the meantime, Confluence, well, basically, Camarilla is one of those points of confluence. So you just need to add other trading tools like trend lines, fibs, pivot point to get confluence, or an oscillator to get that. All right. So Camarilla is just one point of a confluence, if you see what I mean. A candle high or low, or candlestick pattern give extra clues about a potential of a trade. So in maybe, let me see if I can find a useful example. Maybe with the pound dollar, it's a good example. Here you don't only see the L3 and the L4, but we see at the L4 we see a moving average and a 61.8 fib. And perhaps if we look on the hourly chart, not too far. Okay, it's not ideal, but the daily S1 is not that far off as well. So that's how you would find confluence. You need to add other tools and indicators. And how do you know if it's retracing or reversing? Well, you can only make an estimate. It's something we never know for sure. The estimate that I make is influenced by at least 2 things at the top of my head. Support or resistance. Is there a major level close by? And with major level, that could be a top and bottom, a fib target, minus 618 target, for instance, or both, or confluence of fib targets, or let's say confluence of a major level and a fib target. Like for instance, this pound dollar has this clear resistance, I think, on the daily chart, remember, and it has a target, for instance. So that's one thing, because the stronger the level, the more likely that there could be a reversal or at least a bigger retracement going on. And so the more confluence, the better. The second is divergence between the tops or bottoms when looking at the oscillator. The more divergence on one time frame and the more divergence on other time frames, the more likely that the trend is unsustainable. The weaker the momentum is becoming, because that's what the divergence is saying basically, because basically it says, okay, this is strong, a lot of momentum, this getting weaker because the angle of price you can already see is getting weaker, and the oscillator shows that. Now, one single divergence on an hourly chart will not necessarily stop price, and I don't consider that to be very important depending on the situation. It doesn't have to be though. So that with these kind of concepts I play around to get an idea, okay, how likely is a stronger retracement or even a reversal likely? All right, no preference for currency pair. Let me just cruise along then and take a look at pound Swissy, for instance. Pound Swissy looks to be in a bit of a trouble. Resistance line is weakening. Perhaps support line could be a parallel support line too, like this. Looks more like a channel maybe. Could be a slight rising wedge, but it's really slight, so maybe not that important. From that point of view, it's still an uptrend in this channel. And if I put a fib on this particular swing high, swing low, why that? Because this was perhaps it could be a zigzag correction. Then a bounce at the minus 272 target, which is also the, let's see, 78.6 fib of the very last swing high, swing low to the upside, could be a bouncing spot. 144.50-ish. Right here. And still bounce off this 1 hour, but also 4 hour bottom. So that could be an interesting one, the pound Swissy. Let's see. Also, definitely dependent on the pound news event, of course, something to be careful of. Dollar yen is breaking above this resistance line, but it's a passive break. It's a very mild break. It's just going sideways. That's why it's breaking. It has nothing to do with any activity or any push or any momentum. So I don't like that break. Actually, there's a kind of an equilibrium line like this that was support and now is resistance, and we're still bouncing against it. Furthermore, if it does break, then still I have still a bit of a bearish cap in the sense that this could be potential resistance, and we might see head and shoulders. I don't know. I'm even if it would break, I'm still not too convinced of the upside at this moment. I still think that there's a good chance we'll get a bigger correction. So for the moment, I'm not that interested in trading it. If it does break this support line, I would find the breakout interesting though to the downside. And perhaps I'm not that interested in trading the breakout, but on a small time frame it's possible. Perhaps even a kind of reversal short. Alrighty, odd USD is stuck in this wedge. If it would break out, there could be some space like this, or below the support. At the moment it's in a wedge. So those two lines are dominant. Kiwi, let's see, Kiwi. Now that is looking for 79. Oh, I don't think we got there yet. Sorry, not 79, 70.90. No, we didn't get there. Yeah, that still has some space to push up indeed. 70.90 is here indeed. Or the bottom part is 70.65. Could be a bit of a problem in the sense that this is starting to look more like a bear flag, and so from that point of view, could be in a breakout right now, in fact, to the downside. That seems less likely at this moment because of the new information that we just are looking at right now. And yeah, the Kiwi weakness definitely visible on the Kiwi dollar as well. It could be a short right there as well. Now the dollar is not being that strong against the euro and pound. So one way maybe to think of this as not a great setup because it's going against, but against that kind of vibe. But it's primarily also the euro that's pushing it also. So it is a breakout below a 1 hour fractal, below the support trend line. So it could be, from that point of view, it's nothing wrong with it. A break maybe below last hour's low could be still useful at 69.72-ish. With a stop loss above this top, about 70, 13, about 45 pips. Target would be 68.92, about 80 pips. We'll take a look at the Camarilla. Camarilla is, it's showing the same. It's basically breaking below the L3. Moving averages are aligned to the downside. 21 below 144, 21 downside angle, it's red. It's below the L3, it's pushing below the L3. It actually pushed back and it's falling, so I think that that makes sense. I aim for 69.02 instead. All right, so let me see if there's anything else. DAX, we can take a look at DAX definitely. Let me round up. Odd CAD, yeah, sorry. There was pound, so pound CAD, sorry. Pound CAD and odd, yeah. Let me wrap up these two currencies still. Let me also quickly take a look at the euros again. Pound is making that retracement. Wow, euro dollar too. Bit too fast though, almost. Let's see how it goes. I wouldn't be, in this case, I mean, it's good that it's going back to the zero line. No, nothing wrong with that. But probably keep an eye on 5 candles not breaking this low at this moment, because I don't want to see momentum to the downside. I want to see some kind of correction like this and then a break to the upside. Now it's up, down like that. So let's see which side is more powerful at the moment. Both sides seem to have momentum on their side. I would like to see 5 candles not breaking this bottom. For instance, here we have a top. We got 1, 2, 3, 4, 5 candles not breaking this top. We get downside. Here we have a bottom. 1, 2, 3, 4, 5 not breaking the top. We get some upside. Just to give you an idea what I mean with that. How about the other euros? Your odd is reversing too. The swing trade got affected, but as I said, it's not the most efficient entry probably. More efficient would probably to place a fib from swing high to swing low. Maybe look for the 50. Here at CAD, same story. The swing trade got probably taken in. But from a 5-minute point of view, I'll be looking for the same. This to go to the zero line and then looking for the bounce. Especially the Euro CAD has a very good gap here between price and moving average. Let's take a look at the Euro odd. Pretty good too. Your dollar as well, but there's a slight difference. It was more range bound before that. And here we had a good momentum already between. Here, not so much actually. Euro odd may be the best one because of that. Here it was slightly, nicely building. Anyhow, they're roughly the same. Looking for a turn, but no confirmation as yet. All right, quick update on the euro. Let's take a look at quickly at dollar CAD. If we take a look at pound CAD, it's good to take a look at the dollar CAD. Looks at the moment like more of a bear flag, in fact, like this, or some kind of triangle. Still the same story as the last week or so. Nothing really new. So waiting for those two lines, I would say. That seems to be most important. Let's take a look now at odd yen and pound CAD. Oh. Good uptrend here on the 30-minute chart, 50-minute chart too. 1 hour as well, 4 hour as well. Well, this is probably, I don't know, I think it will continue up, but maybe from lower. I'm not, I don't think this is a great spot to go long. I think if it retraces, it would be a better spot to go long. Probably back to the 50 fib, the 38.2 fib, 191.40, 191.70. Look for a bounce there, I think makes more sense. Let's see, we have one confirmed wick. This is not confirmed as yet. If it does, it could signal indeed the prospect of some retracement. We are pretty far from the moving averages, so it could be a back to the mean kind of setup. I wouldn't expect more than a retracement. I wouldn't personally expect a reversal because looking at the oscillator, I don't see any reason for that as yet. No divergence, except maybe not really. So I don't see any reason why we would reverse very, 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 very big. I think it could be just a mild retracement of about, let's say, 100 pips before upside continues again. That could happen. But let's see how this 4-hour candle first closes. Probably the news event will tell. To be honest, I think that now there's not much really. Okay, we do have a wick here, but otherwise there's not much to say about a retracement as yet. Audion is bouncing off a 78.6 fib. Otherwise, a pretty choppy price action here. Looking at the support and resistance like this. Not a big fan. We have support and resistance lines, two sets of them. This time frame and on this time frame. No, I don't know. I personally, I mean, there is downside momentum, but if anything, we're getting closer to support, considering the trend line at this point. I don't know. I would still be cautious for a bounce, maybe back up. Still could be a bit lower though, but I mean, this definitely could still have an effect to the upside. If it breaks, fine. If we see maybe 50-minute dash down, bounce, and then break again, for instance, something like this, that could be still an interesting reversal breakout. But before trading it short, I would want to see the bounce behind me, because otherwise it could bounce pretty. I mean, taking a short here would be running a severe risk of getting something like that, then before it finally might go down again, and it could get kind of caught in that trade. So from that point of view, I don't think it's a good timing. So from that point of view, perhaps the upside has a bit more potential, even if it just goes back to here. If you're looking for longs on Aussie pairs, an Aussie yen could be actually a good one indeed. Makes sense. Audio is the 2 if it gets a bit lower. Euro not that good, I think, because of the fact that the euro is having so much momentum to the upside, or had, yeah. So I don't think euro would be a good pair to go short. Then the odd USD looks better, and odd yen indeed. Okay, let me take a quick look. Let's see at some questions about, okay, DAX. We'll take a look at that. The AO indicator, it's not a volume indicator. It's basically using moving averages. It uses a 5 and I think it was a 30. Now I might be wrong. It could be different numbers actually. I don't remember by heart, but it basically uses two SMAs and calculates the difference. So if the 5 is accelerating away from the slower one, right, then you see an acceleration of the momentum, the oscillator, basically, and you'll see that translate into an increase or decrease if it's in a downtrend. Now, if the 5 is getting closer to the longer term moving average, we'll see the oscillator go back to the zero line. That means falling here or rising if it's below the zero line, like here. That means a retracement or a reversal at that point. So looking at the oscillator is a good way too to get an idea, is that momentum to the upside over? Typically 3 bars of the opposite side are needed. For instance, here we're in an upside. You see one red bar, it's too soon. Here we have 3 red bars, so that upside is over. Could also be used for potential entries to the opposite side. here, for instance. Um, Maybe not the best example, but okay, let's say divergence here. Third red bar is this one. Not the best example because it did break the top, but that would be kind of the key that we're going to get this downside. This is not the best example, but trading is not perfect. But I remember the pound dollar, maybe a better example of a successful setup when using 3 bars is, for instance, this one here. Talking about the upside here, I said 3 green bars, and here we got 1, 2, 3, third green bar right here, and indeed we got upside. Oh, it's a 34, not a 30. 34 simple. Wei has the exact explanation there. It's plotted through the central points of the bars, divided by 2, and subtracted from the 5, also central points of the bars. So it's a 5 and 34, not 5 and 30. Yeah, it could be better to, I think it makes sense to wait after UK news because that really, you never know, could accelerate it downwards. Also upwards, but that's just more of a gamble, if anything, right? So it is better to wait in this case, I think. How do you determine a fake out? I look at price action. I look at where the candle closes in relationship to the high, preferably on a 4-hour or 1-hour chart. And if it closes near the high or near the low, it shows momentum, it shows strength, it shows control of bulls or bears. If it doesn't close that near, if there's a wick, you're running into some trouble. Also, fake outs happen more often in this hour that we're looking at now. That's why I don't like to trade that much at the very beginning of a session. I like to trade the continuation a few hours from now more. I think it's more solid. Because sometimes things like this happen where you get a push and you get this and then you get this. Something like that happens, like an accordion. Something like that. Also, if you like waves, these things tend to happen more often if there's a wave 5. It's the last push. Because you get a 5-wave structure, something like this, for instance. And this part then could be the last one. The target for today, let's revisit it. Well, considering the current pattern that we're having with higher highs and higher lows, there's definitely a decent chance of a continuation when price gets lower and to find one more push up. I don't think there's anything that makes it necessarily not work. Now, there's never a guarantee. Of course, we'll get a bounce here. Perhaps, perhaps this is the end of the uptrend. You never know. You get something like this, and then boom. Because we already had a decent run. But from a point of view that, let's take a look at this fib. If you wanted to be contrarian and put a fib from here to here, to see where the retracement fibs are. Even then, the 78.6 fib is higher. It's at that 156.75 level, actually. So even if this were to turn out to be a correction for more downside, then it'll probably hit the 78.6 fib before turning around and falling maybe back to 150. So even from that point of view, plus we had a bullish day yesterday, and we're in a channel, I think there's a fair chance of a bounce to that level before perhaps a turnaround. So yeah, I think that's a pretty good probability. Now, I wouldn't say like that this level is a target no matter what. I mean, I think it's difficult to say probably about anything, but it seems a decent probability. If we have sufficient time before FOMC, I think yes, because the pound tends to move a decent amount, and for the pound, I don't think it's a big thing. It would have to go 40 pips down and then about 80 or 100 up. Well, I think it's achievable today. But if it would be tomorrow, then it might be indeed tight. I would agree. I think it could be enough time to do that. But you're right. If it does kind of get close to this level, but ultimately kind of hesitate a bit too long, and that's very difficult to quantify beforehand. But let's say if it moves up and 5-hour candles, let's say we have a new high here, like this, and 5-hour candles at the end of the day don't break that level, for instance. That's maybe how I would quantify it. Well, in that case, I might not even hang on throughout the night, throughout the London session. Throughout the Japanese session. I might not even hang on to that long. I might not hang on to the long till overnight. Might close it at the end of the day. Because if we miss, let's say it goes up to, it does make this downside and then pushes up and it hits 156.50, but doesn't go any further. I'm not going to stubbornly hang on to 156.7, in my opinion, stubbornly, because of the fact that after, let's say, it goes up and then 5 candles like this, because that could be the top, and then the Asian session is not going to do anything, right? It's not going to push it up, most likely. Not a high chance of that. So it will be up to tomorrow to make that move, and tomorrow it may not make that move. And tomorrow, because the FOMC, traders might close positions that were in longs, and it actually could retrace deeper if something like this happens. If we get down, up, Asian consolidation, and then tomorrow might fall actually. So if I don't get, from that point of view, if it doesn't reach the target today, I'll be inclined to take the profit at the end of the day, and or at least use a trail stop, but probably take the profit. $40 pips down from here is $155.50. So yeah, the timing is a bit tricky indeed. I agree. If you look at the weekly, can it be the start of a wave 3? It could, but I don't think it is. I think it will probably be an ABC, but it could. In that case, if it's an ABC, it will stop here or here. If if it is a wave 3, it will actually accelerate easily above these targets. So depending on how far it goes, we can find out if this is a wave 3. In any case, wave 3 or C, at this point doesn't matter which one it is. If it is a zigzag or wave 3, we should expect upside till this or this. So from that point of view, it doesn't matter. At this moment, at least. Now when we get here, then we'll find out which one it is. Okay, let me take a look at the DEX. Oh, sorry about that. Okay, finally there. Ooh, indeed, moving a little lower. I remember that last week we were looking at the upside above this fractal. That one very nice for a good run, and anyone using a trill stop could have locked in a pretty good profit, I would say. After that, I see now, I wasn't looking at it after that. I saw it was moving up. I didn't look after that anymore. I remember talking about the fact that yeah, it was uncertain actually how it would continue after that, whether it would be a pull up like this or a move down for. Turned out to be downside and a pullback to about the 50 fib. Looks like 272 target is again the next level here, 1050, 500, 600. Looks like more downside. Now, how to trade it, I'm not too sure. Let me take a look at this hourly perhaps. I mean, the target is pretty clear, but let's take a look. Let me take a look at this 1 hour chart. Maybe a hook back to 1100, 1108. There's a small little resistance zone in here. Move up to 1100 for downside to about 10,500, 10,600. Now that might be a bit of a demanding figure to ask at this moment when looking at this chart. Looks like this momentum is over and we'll probably be in a retracement mode. Now, will the retracement go all the way back to here? It seems almost tough to ask for it. It could definitely be a bit less. It could, it doesn't have to go that deep. It could go when just swinging the 5-minute swing high, swing low. It could turn sooner. 1108 would mean basically going back all the way to this level. That could be a bit tough. So these fibs could also easily be the turning spot. So perhaps from the 1 hour chart, not the 50, but maybe the 38.2 fib at this, let's see, 1096, 100. Or 1090, somewhere here probably. Something like that. That would not surprise me for the moment. So if I would be trading the DAX, I think this is what I would be looking for. From a 1 minute point of view, 5 minute point of view, it looks like we've had, let's see, 2, 4. This is the fifth candle. So if it doesn't break the low, momentum is probably over. It's probably happened, but not 100% sure. Still 1, 2 candles left. Let's see how much it can push down. It looks like it's over, but still some 5, 10 minutes left. If it is, yeah, you can see probably, but it's not 100% sure yet. We'll have to see how it responds here. Alrighty, folks. Well, thank you so much for joining. We'll have more webinars this week. We got tomorrow's strategy, and in the evening, then is going to take a look at the triple exponential moving average. And Thursday, then I'm going to take a look at stop loss placements. I wish everyone good hunting, happy trading, and I also thank you for all of your interaction and feedback. Okay, cheers, everyone.